Wook Capital Management, Inc. and its employees solely provide investment advisory services to family clients and do not provide investment advisory services to the general public. Furthermore, investments are highly speculative in nature and involve substantial risk of loss. We encourage investors to obtain advice from your professional investment advisor and to make independent investigations before acting on information that we publish. We cannot assure you that the information is accurate or complete. We do not in any way warrant or guarantee the success of any action you take in reliance on our statements or recommendations. Past performance is not necessarily indicative of future results, and all investment decisions of an individual remain the specific responsibility of that individual. I think we'll have a pretty quick discussion this afternoon. Joe won't be joining me. He's in Japan right now, and it is sometime very early in the morning. It's 5 a.m. So we'll just get into the prepared material that went out in the newsletter. It's also in the thread that was shared earlier this afternoon. Let me pin that to the spaces here. Okay, so there's that. So summary of the week, another big week for technology stocks, even though they traded down a little bit today. We've got a Nasdaq that's now up over 22% year to date. Just refreshing my screen here to say where it actually is after today. Yep, 22 on the dot. That compares with a Russell 2000 that's down 0.5%, a Dow Jones Industrial Average that's up less than 0.5%, and an S&P 500 that's up about 7.5%. So the name of the day, or the name of the game, has been to rush into technology. Continues to be that story, and it will be until it isn't. The debt ceiling that we talked about a bit last week, they held talks this week with little progress, and the market continues to price in risk at an accelerating rate of a historical debt default. Whether that does happen or not, of course, is in the hands of Congress. We'll see. We got more data, economic data broadly, that inflation continues to disinflate at a pace that, if you exclude the lagged shelter inputs, is pretty good. If you're the Federal Reserve, you're happy to see. Although on the other hand, there's been some deceleration in demand. The senior loan officer report earlier this week showed pretty consistent messaging that tightening lending standards and weakening demand for loans should help the Fed in achieving its goal of bringing inflation back to its stable prices target of 2%. Whether that core PCE gets there by the end of this year or later into 24 remains to be seen. Book club. We've got our next book club on May 30th at 8 p.m. Eastern. That's going to be Peter Lynch's One Up on Wall Street. So I've yet to read that one. I'm looking forward to reading it and looking forward to the discussion. So we've got One Up on Wall Street by Peter Lynch for May. We've got Mike Mavison's Think Twice in June. Mastering the Market Cycle by Howard Marks in July. Fooled by Randomness by Nassim Taleb. I'm looking forward to reading that one. I've heard great things. And then a few others to round out the year. The book list is available in the newsletter, which you can access by either being signed up for it. The link is in the Wook Capital Twitter handle to get to the newsletters, the historical newsletters, as well as if you'd like to sign up to receive them in the future. So we've got a couple of company updates. I'm just going to go through all of the prepared material. There's only a few of us in here live, so I'll walk through the prepared content, see what we'd like to talk about, and probably have a pretty short call this afternoon. So, of course, PLBY Group, we hosted an earnings call broadcast earlier this week where we played the company's prepared remarks on Wednesday, as well as had a discussion afterwards, so I won't spend too much time talking about it. You're welcome to check out that recording. But the company's officially gone ahead and listed pretty much all of its assets except for its core Playboy IP for sale. So they are officially selling the Honey Birdette lingerie and sex toy brand that they bought in 2021. They've hired Moelis as their banker. They've also got Lovers, the sex toy chain that they bought for $25 million in cash. It's also on the chopping block, and they acknowledge that their art collection is also up for sale. As I've mentioned, we're putting the finishing touches on our PLBY DB report that we intend to publish very soon, and now that we have the information from this quarter. So look for that to hit on our social media platform in the coming days. Palantir reported earnings earlier this week. We had their first time achieving a GAAP operating profit for their first quarter 23 earnings results. Now, I've never really followed Palantir that closely. I know it's been a retail investor favorite, and of course, that's why it's on our watch list. They did see a very nice stock pump. If you see, again, if you're in the Wook Capital Discord, I'm sharing my screen. If you're watching this replay on YouTube, you're going to see it there. If you're in Twitter, you can't see it, but it was in Mr. John Author's points of return. You can just kind of see the massive jump that they saw when they noted that demand for AI is unprecedented, or without precedent is what they said for the new AI tool that they rolled out. So they saw a very nice stock pop after that earlier this week. PLTR closed down a bit today, but still up nicely on the week with the news that they are seeing good demand from their big data customers for this purported AI tool. I really don't have much to say on Palantir. I'll keep going. Robinhood, we got their earnings this week, and they're rolling out now 24/5 with the intention of a 24/7 trading service. So I think it's interesting that this was the first time the company generated more revenue in interest income, more like a Charles Schwab style model, than they did in their payment for order flow and trading related fee income. So interesting, the model over time, remains to be seen how it works if the SEC does in fact incorporate some of these shifts away from PFOF to auction pricing, yada yada. But regardless, they're now going to have this 24/7 or 5 trading service, which I think is pretty interesting. So from 8 p.m. Sunday and 8 p.m. Friday. So it's only in a handful of securities to start off. It's going to roll out next week. Every one of their customers should have it by June. Right now, it's really just popular stocks. Think your Amazons, your Apples, your Teslas. Vlad Tenev noted, quote, "It's the next step in evolving the market to how it should work, which is 24/7 and more like a piece of software rather than a brick and mortar institution that's tied to U.S. East Coast working hours." So, thought it was interesting some of the detail, right, on how this actually will work. So Robinhood will route customers' nighttime stock orders to Blue Ocean, which is a trading platform that runs a special session during the market, during much of the outside normal market hours, so from 8 p.m. after hours closes till 4 a.m. when I think pre-market opens. That Blue Ocean platform. Other brokers use Blue Ocean, and of course, during these lower volume outside normal market hours, when someone is buying or selling, it's going to be a high frequency market maker on the other side of the trade, oftentimes a Jane Street or a Virtue or a Citadel. So remains to be seen, how much volume they end up getting on this 24/5 and potentially future 24/7 trading platform. But yeah, Robinhood is doing their best to hang on. Okay, so after Robinhood, I've got a couple of news items. This is kind of a continuation from a week back. Carl Icahn, I put in the newsletter, can't catch a break. So after the Hindenburg Research short report that came out earlier in the month, he is now, or Icahn Enterprises, his entity, is being targeted by the U.S. Attorney's Office for the Southern District of New York, which is seeking information about corporate governance, dividends, asset values, and some other topics. So the stock is down meaningfully from when that short report was initially published. It was up 11% today. It had closed on Monday, May 1st at $50.42, closed today at $35.40. So it's down about 30% still from when that short report was published, which implied that the values of many of the assets of the holding company were being overstated, that it was akin to a Ponzi scheme with the high dividend payout structure. And of course, Carl Icahn owns the vast majority of it, over 80%. So will continue to be interesting to see how this plays out, whether the alleged, I guess, issues that Hindenburg called out for the assets being inflated, whether the U.S. Attorney's Office finds truth to that, or they're able to walk away unscathed, it remains to be seen. It was interesting in, I don't know. So, okay, last item that I have prepared. Again, I think it'll be a very quick call today because it's just me. And so we've got big oil. Obviously, over the last few years, really for much of the last decade, since the 2014 oil crash, really, the oil companies have been pulled back on capex to an extent. And you can see in this graphic that I had shared, it was in the Wall Street Journal earlier this week, that shows just the massive ramp in cash balances that the big oil majors have been accruing over the last 2 years since oil began rallying after the vaccine was found, was discovered. So, quote, oil and gas producers are less focused on capital spending than they have been in years, according to some analysts. So they've got this big pile up in cash. A lot of them have been paying out, whether it's a special dividend or just elevating their dividend policies, share buybacks for some. But what I thought was an interesting take was that for ExxonMobil in particular, their CFO noted that we are not incurring a negative cost of carry on that cash balance. So, ExxonMobil's fixed rate debt has a lower cost of capital, or rather their cost of debt is lower cost than what they can currently get risk-free in treasuries. So it's an interesting situation that they and others with large cash balances find themselves in. This other graphic I included kind of shows for Exxon and Chevron, the two major U.S. Integrated players, how the shift from capex really since 14, 15, a huge decline after 2015. That capex is just way diminished, and a big uptick in dividends and buybacks. But even with that big uptick in dividends and buybacks, again, these companies are still have a lot of cash in their balance sheet, and it makes sense. There's a lot of uncertainty around government policy. There's a lot of uncertainty around the near-term energy market outlook, and it's kind of they're caught in a tough spot where a lot of governments are telling them they don't want their business around anymore, but also yelling at them to invest in long-term projects. So it's going to be a very interesting world in fossil energy, I think, for the balance of this decade, as fossil energy will remain the primary source of generation globally for a long time to come. And you've got this mismatch between what some politicians want and the realities of the world. So it's just very interesting to see, again, these huge cash balances that are actually, higher yield than their cost of debt. So they don't need to act rashly. So, okay, it's 4:20. That was a really quick recap of the items that I had in the newsletter. If anyone wants to ask any questions about any of those items or open up the discussion to any other topics, I'm very happy to field any and all. And otherwise, we can wrap this week's call up in short order. So I'll pause, see if anyone wants to come up, ask any questions. Okay, well, I appreciate those of you who tuned in live to check out our Wook and Review broadcast this week. I am going to then take the lack of hands being raised as a signal to wind it down rather quickly today. Just programming notes. We host these calls every Friday at the close to recap news impacting markets and the companies on our Wookie watch list. We host a open mic call on Wednesdays, and we are looking forward to rolling out some expanded content in very short order. So look for that, as well as the PLBY DD report that I alluded to being more to come in short order. So we appreciate your interest in Wook Capital Management and appreciate you tuning in today, everyone. And hope you have a great rest of your day and enjoy the weekend. Cheers.